Okay, traders, so we have a trade basically. So here is the potential setup. If I just pull this over here, this is the trade we're looking to take. We are around 10 pips away from the entry, but we are looking for price to come down into this level to then buy and trade it to the upside. As you probably see here, the pound has been very, very weak. On the 4 hour, we are looking to sell from this area. So if we buy up 15-minute, we've now broken to the upside, closed above the previous structure, as you see here, closed above, and now we're looking for a retest in to then buy to the upside. Because of the volatility, I am having to use a 20 pip stop loss instead of a 10 pip, and the target is 60 pips as opposed to 30 pips. So that is that, and that's basically it. So it means the lot size will obviously go in half. So to reach 1% on a 200k account, it's now 10 lots instead of 20 lots basically. So it is relatively simple, and that is why I love using 10 pip, 20 pip, 30 pip stop losses. Obviously it's more difficult if you use 13.8 stop loss. Obviously in pips it's going to be more difficult to calculate, but using round numbers like this, I'm not going to say 20.1, I'm going to say 20, because 0.1 of a pip, does it really matter that much? Most likely not, unless you are trading with relatively small stop loss sizes basically. So yeah, around 10 pips away from the entry now, but like I said, 10 pips right now is not a great deal. The pound is mainly weak because, you know, Rachel Reeves has destroyed the economy. So if you're not from the UK, you probably won't understand what's going on, but basically it's not looking great. But for intraday trading, that doesn't really matter too much. For my swing trading, I'm going to take into consideration what's happening off the charts too. But for intraday, I just trade exactly what I see. And I think if you get too caught up in what's going on outside of the markets, it can obviously influence your decisions for your trading, which can be good or could be bad, depending on how you are able to implement them into your trading performance and your day-to-day trading basically. So when price actually gets to this level, I am going to execute, ideally, and get into some long positions. I'm hoping it will happen relatively quickly, and we obviously have this level up here. So if we do get into the trade and price does go up, we obviously have these two levels that are significant. Obviously if price comes to each one, you'll see how I obviously react. If price goes all the way down here and goes below these two bodies, then I'm wrong, obviously, because that's where the stop loss is. And if price goes, obviously tags me in, then goes up and can't break this high here, then also I don't want to be in the trade. It's as simple as that. So 7 minutes left of this candle. Hopefully we go to the downside a little bit further so I can get tagged into the trade. See right now where we are at, this is this like support and resistance retest point. So majority of people that are trading support and resistance would have seen, okay, resistance broken, support. Price goes up, comes down into the support again. They might have then got their entry, but I want price to come back further in to then get the entry to the upside. That's basically how I trade. So only 6 or 7 pips away from the desired entry point right now. It would be nice to get out of this losing streak, even though we are only down 1% on the account. We are going to cancel the swing for now, and obviously if price does return to that level, we can also get back into the trade. But we are coming down slowly to the level. With trades like this, if price obviously doesn't get to take profit or stop loss before the close for tonight, then I will close the position myself. Okay, so we're getting to the entry point now at 877. So we're going to look to get in our buy position when price does get to this level. I'm not actually sure how to place a line tool on here. Okay, so we're going to put a line in here at around this level. So if price does come down to this level, that is when we will obviously look to place the buy position on this trade. We are very, very close now to the entry. A matter of pips, 2 or 3 pips away from our entry point. Okay, here we go. Around a pip away from the entry point now. Okay, so trade entered. And obviously if we lose, minus 2k. And if we win, plus 6k. So we are in the trade. And as you see, currently in profit actually, which is a rare occurrence based off of what we've seen previously. Ideally, what I want to see is price break this high. So if we add a line on the C Trader 2, this high here is what we want to see break. And if price obviously breaks this high, then we are confident that price will continue up to this level here and fill this level, which is why the take profit is there in the first place. And like I said, the same goes for the low down there. So around $170 on this trade now, which obviously being in $180 profit very quickly seems great. But when you realize that 1% of the account is $2,000, doesn't seem as impressive. That's the best way to put it. So now $200, which is around 0.1%. Okay, around $400. So we doubled now the profit, which is around 0.2% of the account size that we are in profit. You see, the account balance here is $197,746. So let's just say $198,000. So if this trade does win and goes to the full take profit, then we will be up around 2% on the account. Obviously, we had a 1% loss, and if we win, we're up 2%, which is obviously the power of risk to reward. But that is if we hit the full take profit at the 60 pip range up here. Okay, price is actually rejecting this level really well. As you can see, even if we look on the trading view, price came in, obviously we got entry, and then price is now rejecting to the upside around 5.5 pips or so currently, which is great because that means obviously every pip is $100 profit. So if we go up 20 pips, we're up obviously 20 times 100, which is 2,000. So rather than just sitting here watching the trade, I'm going to do whatever basically and just let the trade run and see what happens if price does get to that high. So what I'm going to do is I'm going to set an alert at this high here. So now if GU goes to this high, I am going to be aware of it because my phone will get a notification, and that means I can then manage the position. Obviously, I don't want to know if price goes down to my stop loss because, if price is already down here, there's not really anything I can do management wise to change the course of the trade. Whereas if price is up here and I have profit on the table, I don't want to risk it if the trade then becomes invalid. If price fails to break a high, closes below, creates a new lower high, for example, then I can make a management decision. But I'm going to leave you now with around $500 profit. Hopefully next time I see you, this is in the thousands. But yeah, catch you guys in a bit. Okay guys, so as you can see, $1,700 in profit now. We are approaching the 1% range. So if you see here on TradingView, if we just get rid of this, to get to 1%, we obviously need 20 pips, which is around here. So we are obviously very, very close, around 2 pips away from getting to that 1% range, which is obviously a good place to get to. And then obviously the next stop is this high here. And I'm really, really happy with this entry. It's very, very nice. The best entries possible are ones that tag you in and then just fly to the upside. And this is a prime example of where that has actually happened. So as you see, 1900 basically now, and this is a great sign. Price obviously now needs to break this high if we are going to continue to the upside. I know I've mentioned it a lot, but that is very, very significant. And when I say break the high, I mean close above. It could close below once, and then break above and close above, that's completely fine. But if you see, if I go on trading view, this example here, so let's find an example. So this here, so obviously this is the high. If I was buying here, looking for price to continue to the upside, then I'd want price to not do this and then drop basically. So if we draw that across, if price comes up, wicks into the area, closes below, but then the next candle doesn't close above, then I would close the trade here. So simple as that. Because obviously there are times where price wicks in, maybe it gets to the area during the last 30 seconds, minute of the candle, and then the next candle does actually close above. So we're not being like, okay, is it very, very close to closing above? Oh no, we're going to close the trade now. I have set rules for that. I know some people will be like 3 closes below or 4 closes below, or price will have to retrace a certain amount, but I just want to see price close above. And if it doesn't, I want a good enough reason that price can no longer go to the upside in my desired direction basically. But that was just a little update on how the trade is running so far. The update. So price has not actually got to that previous high, the level we were actually looking to see how it reacts yet. However, we are very, very close. This candle does close in 5 minutes. And if we look on the C trader here, we're up around $2,200, which is around 1%. And it is around 8 p.m. in the evening. So the situation with this trade, I don't want to hold overnight basically. So I want to see what happens here. If price does right now close above on this candle, then that will be great news. If it does not, then I will close out the trade if it's still in the same area for about 1% profit. And the reason I don't want to hold the trade overnight, because obviously 60 pips and we're only 23 pips into the trade. So, we have another 40 pips or so, just shy of 40 pips. And the reason is, and as you see here, we have non-farm payroll tomorrow. So we have NFP tomorrow, and I don't want to be holding the trade through NFP. So let's say price does break up, consolidates like this, or even drops back down further. I don't really want that to happen. So what we're going to do is I'm just going to close the trade. So we're going to close the trade, boom, and we have just made our 1% basically. So on the history here, you can see $2,200. Obviously, there are commissions on the trade. So we made $2,140, which is just over 1%. But obviously, this trade, which we actually lost, we lost just over 1% or more over 1%. So we're basically at break even here, $114 down, but with a trade that, you look here, $114 is the commission usually on a trade. So in my mind, I'm at break even. I've had a 1% loss. I've had a 1% win. So in my mind, I'm break even, which is kind of a good thing, because a lot of people, when they're trading, they get to the point where they start a prop firm challenge. They're at $200,000. We'll use that as an example because this is what I'm currently trading. And what will happen is they'll go under. So they'll go to minus 1%, which is $198,000, or even minus 2%, which is $196,000. And then they'll just be aiming and trading to try and get above that $200,000 again. People often see it in the markets. If I show you now, they'll see, okay, we have the level here at 1.23000. And that is a psychological level in the markets. On gold, you have 1900, 1925, 1950, 1975, these psychological levels. And I see it happen with a lot of traders, the same thing with their account size. So they'll start a challenge. They'll obviously have that 9 or 10% max drawdown. In this case, with hydro funding, it is 9%. So I know that I can't lose 9%. So I can't let the account go down past $180 $282,000. I'm pretty sure if my maths are correct. So if you're ever under that $200,000, in the back of your mind, you're constantly thinking, how do I get above that? Whereas if you have gone below and now you are at break even or you're back up on the account, the trading is a lot easier because you know that you're not in drawdown any longer. You've been in drawdown and you've managed to get yourself out. And I feel like that's where a lot of people struggle when they initially go into drawdown. I don't struggle with it because over the past 3 years, I think I've been trading with prop firms. Every single time that I've bought a challenge, pretty much, I've been in drawdown, or the first trade goes into drawdown and then I have to trade out of drawdown. I don't know why. It's just something that happens. The first trade I take always loses. It's something that's been happening to me for, like I said, 3 or 4 years. But it works. I still make profit, so that's completely fine. So you could look on the charts now and price could have skyrocketed to the upside. But I have my reasons to close the trade, and that is why I'm not holding the trade. Especially as, obviously, in 2 hours' time, we will have the rollover. So we'll have the spread hour. So the spreads will open massively, and I don't really want to hold a trade overnight. So on the Hydro Funding platform here, if you guys want to use Hydro Funding, there's a link down in the description. Obviously, it's the prop firm I'm using for this series, the live trading series. If we go onto the dashboard here for the $200,000 account, you can now see the trades at the bottom. We've obviously taken a 0.01 to avoid the inactivity rule. You have to obviously be active on the account. You can't just leave it for months. And obviously I had the account and then I didn't trade it for a while because I was trading the 100K account. But I've given you reasons why I trade each of the accounts. So you see that first trade we actually took, which I'm pretty sure was in the previous video on the channel. Then you also have the profit here. So that trade was 11 minutes we lost in, and this trade was a winner, obviously. And we only made 1%, but it was 3 hours, 35 minutes. So relatively simple day in the markets. It's been a tough week overall for me, and it hasn't been as great as, I'd usually hope, but that's completely fine. There are going to be weeks, there are going to be months where the markets just don't go in your favor, and you have to risk manage and trade accordingly. So what I'm going to do now is non-farm payroll tomorrow. So unless there are any setups in the morning, you guys will see this video and that will be the end of the video. But if there is a trade tomorrow morning, then hopefully we can trade that. And if we make a 1 to 2 or 1 to 3 risk to reward, then that means we are 2 or 3% closer to our target. It will give us the buffer on the account that we are ideally looking for. But before I leave you guys, I just want to show you that this was an absolutely beautiful entry. You literally can't get better. Obviously you could get half a pip better, but this trade was beautiful, and I'm glad I showed you guys the trade because it's kind of like a journal for me too. I can see all my trades, I can see how I'm managing the positions, I can see my entries, I can see the whole process, and you guys obviously get to see it too, which is a bonus for the both of us. So I'll catch you guys in the next video, hopefully with some more winning trades.